Hey everyone, how's it going? It's Dennis Weiss, CEO of IPQS.com. And today we're here with Steve Lenderman. We're going to be talking about leveraging risk scoring APIs to detect synthetic identity scams across various industries. Steve, tell me about yourself and what you do.
Sure. So I've been in the financial fraud sector for about 25 or so years. The last few years with this fintech called BMTX. Prior to that, with ADP, largest payroll provider in the world, PayPal, and then pick a credit card company. Before that, been working with synthetic identities since the early 2000s, when I was exposed to it in the credit card space, where it actually kind of boiled up and developed. I actually manage a few synthetic identities that I use for what I call research purposes only, just to see how they behave and how they can still be used. In order to catch any type of fraud, you kind of have to figure out how the fraudsters are doing it. So that's kind of how I play in the space there. And then been talking and presenting on synthetics for since I feel the early 2000s, and it's interesting how synthetics have really matured, right, and merged and changed out of the credit card space, and we'll talk about it a little later today, where they've gone to, where they're going to, right, and how they're going to get there.
Awesome. Yeah, it's great to hear that you're using APIs. So a lot of investigators that we work with do manual lookups, which our tools work really well for that. But recently I was reading a book called Investigating Cryptocurrencies, Understanding Extraction and Analyzing Blockchain Evidence. And actually on page like 180, I saw IP quality score being used there. So it was really cool to see someone like manually using our tools to identify like fraud and stuff like that in the financial sector, and also in the cryptocurrency space. But let's talk about your favorite scam that's happening, or something that's happening synthetically that you've noticed.
Yeah, so I mentioned the synthetic space really kind of blossomed in the credit card industry in the early 2000s, and really has stayed there for quite a while. But I would say the last 3 years or so, right before the pandemic, right? The pandemic did all kinds of fun things for
Yeah.
consumers and for fraudsters. We saw a significant shift of synthetic identity fraud. I would say out of the credit card space, out of the kind of the financial sector, and it's now moved into other areas such as government-related assistance, right? The PPP frauds. We're seeing it now in healthcare. We're seeing it in later. We're seeing it in a lot in home and mortgage real estate. It's really, they've kind of shifted because the banks have really gotten pretty good at this by using certain, different vendors out there that are leveraging APIs, right, to identify the synthetics. And any good fraudster is going to go the path of least resistance. And so they figured out that a lot of these other verticals just have not been exposed to it, so they're able to take advantage of that, and they're not defended well, right? They are using archaic manual processes, not able to ingest large amounts of data in real-time settings to make real-time decisions. So most of the time we're seeing the synthetics, when they catch them, it's a year later, right? And they're only catching them because the game is up, right? The bad guy has taken the money. The institution is trying to figure out why they haven't been paid back, or where the victim is, et cetera. And they figure out the whole thing was a synthetic play. So it's pretty interesting to see how they shifted and have gotten much more complex, right? Before it was, proverbial gentleman in a hoodie in the basement acting as the fraudster, right? And so, I said I manage 3 synthetic identities, and every day I have to do that through some help, right? But I'm in there managing the synthetics because they have to do that like a real person. These large organizations are managing hundreds, if not thousands, of synthetic identities, are doing that through bots, right, through scripting. And I'm sure they're using some API calls as well to make sure they keep their synthetics looking legitimate in the industry.
Yep, and that's one of the reasons we built honeypots throughout the interwebs. We do have like fake websites, apps, blogs that's catching a lot of this bot activity, and it's really cool to see it in real time, catching bots and stuff like that. Are you familiar with residential proxies?
Yeah, I'm more of a grunt than a geek. That I would say, put it nicely, and I use the geek as a term of endearment, because without you guys, grunts like myself are kind of fighting in a trench without any direction. So I'd be like, listen to what you have to say about it and make sure we're on the same page. If you want to enlighten me,
Yeah.
I'm
So
all
I
for it.
mean, 10 years ago, a residential proxy basically was your device or computer being hijacked by some malware, and then a malicious user would use your bandwidth
Yep.
to go do their malicious activities. Now there's a lot of providers out there that actually pay people to use their bandwidth, and then what
Yep.
happens is they're selling that to malicious users that are then using it. But those connections look like regular Comcast or a Time Warner connection. So to the naked eye, it's like, oh, this is a clean user, this is clean traffic, no problem. But in fact, it's actually a malicious user behind it.
Yep.
And what
Yep.
IPQS has done is we've infiltrated a lot of those providers, and we're able to find fraud happening from there. And I would say nowadays, like 95, 96% of the fraud that's happening is coming from residential proxies. So,
Yep.
like I said, the naked eye isn't ready for it. So that's why APIs can help you find that in real time.
Yeah, that's a great point. One of the initial indicators when we looked at synthetic, right, is everybody looked at, the early 2000s again, like what's the IP? Can we match the IPs all together? And it's, like you just mentioned, the residential IPs, you can make them look like real people, right? And that's the challenge from individuals who manage, large amounts of synthetics, is that you have to make each synthetic look unique, right? They can't all come from the same device, the same IP, right? They have to come from different places. And so using residential IPs there, I think it'll make it interesting to see how you can spread that out. And the banks are going to say, well, this looks legitimate, right? This synthetic identity is supposed to be coming from Akron, Ohio, or coming from Tallahassee, Florida, right? And so they can match up. And then the banks take that as the gospel and don't look at it as suspicious and let them in the door. So that's kind of a
Yep.
scary thought.
Yep, exactly. And that's also why IPQS does a lot, this onion approach, I like to call it. So usually a competitor will just look at an IP address, or they'll just look at, a disposable phone number or email or something like that. IPQS, we look at every single layer of the onion. So we're looking at IP, phone, device fingerprinting. So we have that whole picture to catch a fraud and then get a fraud score in real time. So that
Yeah.
fraud score or risk score is really what you can rely on when you use APIs. What data points from APIs do you find are the most accurate to help you catch fraud?
So what are the most accurate versus what are the most helpful? I think that's a thin line. So obviously what we consider, static data is probably the easiest to use, right? Because that's data that's been structured. It's in the aggregators out there, right? So pick a vendor, pick an open source, right? We're using APIs to aggregate all that data for us, right? And try to paint that picture of what that identity looks like from a digital perspective. Because keep in mind, these are synthetic identities. There is no real person behind them. They're just basically digital ghosts, right? And so we're trying to aggregate all of these different identifiers and say this is what a true person kind of looks like, right? We as individuals, we behave the same way all day, every day, right? We're logging into our Amazon accounts, we're doing this, we're doing that, right? We're leaving those digital crumbs that are there. Synthetic identities don't always do that, right? And when they do that, they're sparse. So the trick is to be able to aggregate those all together using API calls to multiple, as aggregators, open source, different solution providers out there, maybe like IPQS, right? And putting all that data together. Now, what's really most helpful for us to identify synthetics is looking at what I call non-traditional data or dynamic data, right? These are the things that aren't always easy to pick up, right? It's looking through not just do they have a Facebook account, right? But what does the activity on the Facebook itself look like? What does the Amazon account look like? Are they behaving like normal shoppers, right? Because we all have those accounts, and every synthetic has those accounts too, right? So we're trying to get into that non-traditional data, the stuff that changes. I'll give you an example because I always do this. This is kind of fun. I know what large providers buy, right, and where they get their data from. So in my synthetics, I make sure every month to order a pizza, and I send the pizza to my commercial mail receiving agency, where the address I use for my synthetics. And I do that because I know like certain vendors buy the data, shipping and customer data from pizza companies, right? And so I'm ordering pizza and having it delivered to this commercial mail receiving agency, and the employees love me because they get a free pizza every month. But what I'm really doing there is just validating, right, through that non-traditional data that, hey, Dennis orders pizza too, right? Steve orders pizza too. My synthetics order pizza too, right? And so I understand that using that data source, right, that those vendors are going to pull Domino's, Papa John's, whatever it is, through an API call, right, and bring it back in there and say, hey, yeah, that address is legit. Like we just saw the credentials log in. We just saw he ordered pizzas. He's cashing a rewards program in, all that fun stuff. And I get all that data now through API calls, right? So that's how I use non-traditional data to kind of catch fraudsters, because most fraudsters, synthetics, don't understand they have to build the second and third level of their identities. They're only building that top level identity because that's all most banks are checking for, right? And so they get past it.
Yep, very true. Tell me, like the coolest scam that you've seen recently. Anything new in the space you've run into?
Yeah, so this this is a large case in Florida, of course, where all fraud happens, involving PPP fraud. This case kind of developed in my prior employer, where we're obviously trying to validate that there's an actual business, right? And those business have actual employees. So a term I use is called synthetic entity, as in the synthetic business, and they're a little different than a shell company or a shelf company, right? These businesses were created specifically to commit fraud versus a shelf company looking to age a business, and a shell company that's just typically your money laundering, right? But these synthetic entities are actually created to commit the fraud, right? And so what you need for PPP fraud is a business, right? And you need employees. Now you could steal an employee, steal a business from somewhere else, but more likely they're going to figure it out. And when you steal identities, the victims eventually say something. So this was a perfect opportunity for these bad guys to create a synthetic entity, vanish, made it out of thin air, right? Which is very easy to do with very easy data sources. And then they used 700 synthetic identities as the employees of this company, right? Which inflated the payroll to millions and millions of dollars on a monthly basis, which qualified them for more and more money with the PPP scam, right? And so the scam ran for a while because, again, there's no victims here. No one's calling to complain they stole their identity. There's no business complaining about it as well. And so this case went on and on and on. And this was not, again, this was transnational organized crime that did this. This was not the kid in the hoodie in the basement. A case to go on the trial in a few weeks, and interested to see how this plays out. But it's an awesome case.
Interesting. I'll have to check that out. So when you're looking at an API, I mean, when you're checking, like what's important to you on the data quality? Is it fresh data? What are you really looking for there?
Oh, it's got to be fresh data, right? So just like anything, right? Because synthetics are so easy to create and aggregate, they're going to appear new, right? And so what I'm trying to do as a synthetic identity fraudster is actually try to mature that identity faster, right? I'm trying to make myself look like I'm really a 20-year credit history. I really have these accounts. I really have these credit lines, these inquiries, all this customer activity, right? And so for me, I need to get that information as fast as possible, right? And I don't want to wait a month to be able to validate identities or validate information on there. So I really need to get a chance to look at this stuff sooner than later, right?
Yep.
Because I can change all the identifiers of my synthetic identity instantly, right? And then re-aggregate and repopulate those into the wild. So it's important for me to get the fresh data there because I can see those changes kind of in a real-time scenario and then make adjustments to pivot, right? If they get shut down at one entity, where are they going to next, right? I don't want to wait to see an inquiry on a credit bureau that says, oh, they went from this bank to that bank 4 days later. Like I want to be able to see that real time where they shifted and went from one bank to another, with fresh data through some API calls.
Yep, that's awesome. I mean, it sounds like you're doing it right. You can't really do it wrong the way that you're doing it. So give you props for
Well,
that.
we still get beat. We all get beat. And sometimes when fraudsters beat you, just got to clap your hands and tell them, you win. You got us,
Yeah.
right? And the
I
trick is
do
to
like to
learn
say
from
that
that and move
fraudsters
forward.
are, the smartest person in the room or getting the easiest from A to Z. They're always really good at that. So I give
Yeah.
them props as well. So I agree with you there.
Yeah. Well, they have less rules, right, to follow, right? We have the regulatory constraints. We have privacy laws out there, and we just have to do the right thing, right? As customer base, and we want to have negative impact on our good customers, right? And so we have to balance that all out, right? The bad guys don't have to worry about that, right? They can do whatever they want,
Yep.
when they want, how they want, when they want.
Yep, exactly. And when you're looking at all these APIs, are they giving you a risk score or are you just looking at the data points and then
So
making
we're
an
looking.
algorithm?
If we can get the risk score, we'd love to get the risk score, right? For me, I call it like what our fraud GPA or our risk GPA, right? Going back to the old days of high school and college, right? We ingest data from multiple different sources, and if they come with a risk score, great. We will try to, I guess, curve that grade and put that in our risk GPA profile. But then we'll also look at aggregating all those risk profiles together and kind of give us that overall GPA, right? So we may get a very high risk score. It says comes in from a particular vendor who's, let's say, doing a device, for example, right?
Hmm.
And we get an IP score that comes in and it says it's super high risk, right? And then we get some credit bureau data that says that's no risk at all, right? This looks like a legitimate individual. And then we get, some bank account validation information, right? So we try to look at that entire risk profile, come up with what we think is, our risk threshold. Now, one thing I will tell you, being in a fintech space and having to know your customer is you have to adjust your risk profile based on your business, right? So, when you're working with, for example, let's say an American Express who has, prime and very good customer base, right? Their risk profile is going to be completely different than mine in a fintech space where I'm looking at, typically a subprime type candidate, right? So
Yeah.
my normal customer is going to have a mid 600, let's just say, credit worthiness, right? For like an American Express's normal risk score is probably going to be, anything below a 700, right? If I get a 700, I'm excited, right? That person shouldn't be coming to us to do business, right? Just because it's not our normal business. So you got to be able to understand and to adjust, and I call it like grade the score, right? Or curve the score, adjusting amongst your business type.
Yep. Yeah, you mentioned some really great points. I mean, KYC, we have all these regulations and things that we have to follow with compliance. But what I like about IPQS is that we do KYC without having to do KYC. So we're not in the business of identifying a user, we're in the business of identifying fraud. So the way you're looking at it is basically like the onion as well, where you're looking at all these different layers. So a tool like IPQS, which looks at IP, email, phone, social, checks and things like that, we're able to give you a clearer picture like that, and that helps with like less false positives as well. So, I mean, if you and I are both at a Starbucks on the same Wi-Fi, most companies will be like, oh, this IP address is no good. But when you get into tools like ours with device fingerprinting, you're able to figure out, hey, this is Steve and he's hacking into a bank, or this is Dennis and he's just trying to check his bank account. Because I'm not a fraudster, but I don't know about you, Steve.
Well, I try not to be. I do. I have a separate dirty machine over here and a few burner
There
phones
you
and
go.
devices that we
There you
use.
go.
From that perspective, my lovely neighbors tend to leave their networks wide open too. So
Yeah.
that's always a help for sure.
Yeah, that's great. So what do you get on that pizza when you order it for the staff?
Whatever the special is of the month, you know,
Okay,
I try to keep it interesting for those guys. So,
nice.
interesting topic. You talked about KYC there. If I could just bring it back a quick sec. Um,
Yeah,
you know,
please.
it's always funny because I always joke with our compliance team, and again, these are my opinions and my opinions only. That's my legal disclaimer for whatever reason, right? But I joke because like, oh, we have great KYC, and my response is always, every fraud passes KYC, right?
Mhm.
Every fraud passes CIP, every fraud passes KYC. But what IPQS is doing, it sounds like it's looking at it from a different perspective, right? Because most KYC, again, my opinion only, is kind of a box checking exercise, right? You're just going through, yeah, we did KYC, we did CIP. Sounds to me
Right.
like you guys are actually taking it like from a different angle with a fraud perspective and not just saying it's a box checking exercise, which would be great because if I can eliminate that at the front door, right, or even at the driveway, right, that's a win-win for me because then it saves me money from other vendors down the road trying to validate everything. Obviously, even once you open the door, crack the door, the bad guys are already there, right? And so I don't want the
Yep.
door to even be open. So that's pretty cool stuff what you guys are doing.
Yeah, and that kind of detection too, usually it's after the fact. I feel like you're going to run into it. With IPQS, it's all proactive. So we're looking at all the data as soon as they hit the page or a transaction page or, a registration page. We're already looking and already know if this is going to be a quality user or not, giving you a fraud score in real time. So
Good
then
stuff.
yeah, that allows your team to kind of like, hey, if this score is triggered, then we kind of pay more attention. If it's not, it's okay, and then you can follow trends and stuff. Something else that we do too is every tool that we have, we do let you scale it. So if you're having a lot of VPNs coming in and you want to like focus on that more, we can help you do that. You can control it all on the back end. And I haven't seen anyone else doing that. So it's really cool that we have these sliders where you can really fine tune your profile, what you're trying to stop. So I do think that we do a lot of good stuff. So
That's
excited
pretty
that
cool. Yeah, I always talk about tuning our engine, tuning our model, right? Because you just can't
yep,
set it and forget it. The old chicken fryer
yeah,
infomercial, right? You've got to constantly be in there adjusting your thresholds. Especially if you have sales goals to meet and market goals to meet, right? Depending on where you're at, right? End of the month, we know more fraudsters come the end of the month because we know the sales teams want to get those books, accounts on books, to close out the months. If
yeah,
we need more books, we scale it back. If we see a ring hitting us or something, we'll tighten those screws down. So that's a fantastic feature you guys have.
Yeah, exactly. And a good example is we work with a lot of airlines, and the fraud that's attacking one airline could be a totally different on a different airline, even though they're trying to do the same thing. So you have to be able to scale that and, move your sliders or look at the data a little different and stuff. So we do have a
Cool.
tool, or a data set, I should say, called Abuse Shield. And that's where we actually look at the same industries and we see what fraud is targeting it. So, we'll go on forums, we'll go on the dark web, and we'll kind of see what's hitting different industries and stuff and how they're tweaking it. Because when a fraudster gets through, they do like to boast a little bit and go and
Oh yeah.
talk about it. So we do like to watch all that stuff and make sure we're on top of it. And I do think we do that a little better than a lot of other companies out there.
Yeah. Okay.
Steve, are you into spirits at all? Vodka, gin, absinthe, anything like that?
I've gotten into more gin. I found my palate is changing as I'm becoming more mature. Was a huge
Okay.
IPA guy for a while, but now I'm getting into more gins now. So
Okay. Awesome. IPQS does own a distillery, so we will be sending you a bottle of our Straight Jacket gin. This is our Yeji Baba color changing absinthe, but we will send you a gin out so you
that
can
is
enjoy that.
awesome. My
Yeah.
wife will not be happy, but I will be very happy.
Hey, does she like coffee? We have a coffee roastery as well.
Oh no, she's got plenty of coffee. Don't worry, we're good. I appreciate the
Okay.
offer. That's really cool. You guys are kind of diversifying others things. That's really fun.
Yeah, it's fun. I mean, it's a great conversational piece, and it's just fun for clients to come in. We have a speakeasy here in Michigan, and it's a great time.
That's good stuff, man. Good stuff.
Cool.
Cool.
All right, Steve, that was a great conversation. Thanks for being on, and we'll catch you soon at a conference or something.
Absolutely. Thanks, guys.